Good afternoon and welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Let's talk a little bit and recap what happened on the markets this week.
Yeah, so I think when you look at cash markets for a minute, we're down a little bit in terms of feeder cattle prices for the week. Still a little tough to get too much test on fed cattle markets in terms of cash. Hogs down a couple dollars in cash markets for the week. However, when you look at the futures market side of the equation, we've been up fairly strongly in terms of both fed and feeder cattle for the week. So some good news there, another $5 to $6 jump. Hogs, we erased some gains we had today for the week. So we're pretty flat in terms of hog futures for the week. And I will say, at least on the feed cost side, we do have cheaper corn futures as we move through the week. And I believe reports we got from USDA this week helped us move lower in terms of feed prices.
Scott, let's talk about that WASDE report that came out earlier this week. Any big things that we need to take from those numbers?
Well, number one, I think USDA may have caught some market analysts a little off guard with what was an increase in corn yields relative to the previous month. We now can look at corn ending stocks going out of the crop year we're currently in at about 2.4 billion bushel. We got to go back into the late 1980s to find carryovers at that level. So it tells you we've got a lot more buffer than we've had for a long period of time, even if we had short weather. So I think that's a big part of the picture in terms of feed prices may stay fairly reasonable. And if you look at maybe what's happening in South America, as long as they get a big crop harvested, again, I think we got a lot of pressure on feed costs. Now, the one that caught my attention this week is USDA's cattle price forecast for 2017. So for much of this year, they've been forecasting fed cattle prices for 2017 annual average in the $1.15 to $1.25 range. They, however, lowered that to $1.06 in the November WASDE that we got out this week, and that's a $10 decline from 1 month to the next. And it just reminds us that I do think there's some downside risk in these cattle markets. Maybe they'll have overdone it at the end of the day, but a big revision relative to where they've been for a number of months.
Scott, as we talk about that potential decline in those cattle prices, when we talk about risk management, what are some of the things that livestock producers, specifically cattle producers, need to think about in terms of mitigating risk, maybe controlling losses as much as they can right now?
Yeah, so I think we can always talk about, again, those traditional tools of using futures or options to try to lay risk off. We talk a lot about the RMA product that USDA provides in terms of livestock risk protection, or LRP. Those are all possibilities. I don't think many of our cattle producers feel very comfortable with any of these tools yet, but I keep reminding them that they need to be looking very carefully at those. I will say, just understanding the physical holding of calves for a longer period of time, maybe hoping for higher prices. Thinking carefully about that strategy is important, because I'll tell you what, you can go a few weeks down the road and you might add more weight to those cattle, but at some point, if prices don't recover, that risk management strategy doesn't work very well as well. So I do think we're going to see some folks who might decide they want to retain ownership in the feed yard, and that might actually be a reasonable risk management strategy given where we're at right now. But they need to work very carefully with feed yards or someone as they think about that whole risk management strategy in the feed yard. That's a whole different enterprise that carries a whole different level of risk relative to a cow-calf producer.
Scott, let's talk a little bit about the export side of things. As we look at those export numbers and recent export numbers, are we showing and seeing some good signs for livestock movement right now?
We are seeing some good signs, and it's good when we know we've had a stronger dollar that we've had to deal with. I think it tells us that demand for U.S. beef and pork products are getting stronger. If you look at the third quarter export volume for beef, about 307,000 metric tons. That's the largest since the fourth quarter of 2014. So pretty good news. In terms of beef export values, we were up about 17% relative to a year ago. If you look at the pork side, also some good news. Pork exports in September up about 7% from a year ago. That is a little lower than where we were in August, but still pretty good news. January through September on pork export volume, we're about 5% above last year's pace. So all in all, some good news. And again, I think as we've talked about all along, we have to find new consumers or additional consumers given the kinds of domestic supplies that we're putting on the market today.
And I would assume also the amount of pressure of when we talk about those big supplies of pork, what do we do with it in addition to domestic markets, export, international markets, and making sure we have a place for it?
Absolutely. I think when you look at what we know is tight packer supply situation this year, as those new processing facilities come on board in 2017, we do have to move that pork somewhere that those new facilities are going to be producing. And although maybe we'll see additional supplies being consumed domestically, I think we need to really be looking at international markets to take on a lot of that additional supply that's coming.
While that's good news, and we're seeing some good news for exports, we're seeing some good news on that side of things. Tuesday's election has come and gone. We have a new president-elect, and neither one of those presidents were really pro-TPP at that point. What does that mean for TPP, and what does that mean potentially for export volume and growing those international markets?
Yeah, so I think when you look at TPP, number one, I think there was a lot of hope or anticipation that once we got beyond election that maybe that was one of the issues that would be handled in lame duck. I think at this point that's pretty much off the table as well. I don't think we're going to do anything in TPP or in lame duck regarding TPP. It doesn't mean we won't come back at some point and talk about it down the road, but I think we've really pushed it further out and we won't see anything happen in the near term. I always like to remind folks that the TPP agreement isn't so much for 2017 as it is for 10 years down the road when we can get more full implementation of some of those components that make up TPP. And I'd just like to remind, for example, beef producers that when we face in many cases an excess of a 40% tariff on beef products into Japan, and the Australians are going to be in a situation where they only face a 9% beef tariff, that competition is going to be tough for us to compete against. So that long-term TPP strategy, I think, is certainly helpful for livestock markets, both cattle and hogs in particular. But yeah, we sure have seen markets a little uncertain going through the last election. I don't know that that's any different than we've seen for a while. But when you talk about a futures market that was 600 points down in terms of stock futures to then the next day be up, it just tells you a lot of folks are trying to search for where they think the U.S. economy goes and everything associated with what happened in the election.
I hear economists talk about the fact that it's easy for candidates to be anti-free trade agreements, but it's a little bit different for a presidential or a president to be pro-trade and those types of things. Does that maybe volatility calm down a little bit once we get some answers about who goes into place and the transition to the new administration?
Yes, I think it will become clear as we go through that transition. I like to remind folks all the time that transition takes time. You're going to go from a USDA that is going to look very different, and getting all of the participants in place, longer term is going to take more than a few weeks. So it will take time before we get a lot of clarity, but I expect as we look ahead that it will become more clear where this administration is going to go.
Prior to the election, the consumer sentiment came out. It was a positive move. Does that maybe get a little bit more volatile as well as we get into this transition period?
It very well may. So we were up 5% in terms of consumer sentiment relative to the previous month. So it was a nice recovery after actually being down in October. I think it really reflects a little bit of what were a better economic situations in the general economy. When you look at that current situation index, it was up, as was very strongly up consumer expectations of what was going to happen in front. So I think we'll have to wait and see. I think a lot of folks at this point are trying to evaluate everything that's happened this week. But from a animal agriculture perspective, I will say we have to pay attention. There could be volatility, and I don't say that in a negative way at all. But when you're going to market commodities, you have to think very carefully about when exactly you want to pull that trigger. And the last thing you want is to end up selling in what's a very short period of time of maybe lower prices.
Scott, as we wrap things down this week, the KC Fed released their ag credit report yesterday, and it looks like it's more of that same sentiment as we look ahead to 2017 and beyond.
Yeah, the picture for agriculture is not getting any better right now. I am worried about where we continue to head as we go into 2017. The report they released yesterday shows that the amount of collateral for loans has grown substantially. The amount of available capital to be loaned on the ag side is tighter as well. Loan renewals or extensions have continued to spike up, and in fact, if you look at that in particular, it's the highest in their index that we've seen since 2004, as is the loan repayment rate the lowest we've seen since 2004. So all of that continues to say we've got more stress occurring as we look at the 10th district information. They are showing land values continuing to move in the negative direction as well. So we'll have to wait and see how far this goes as we move into 2017. But it looks like we're going to continue down this same path where the financial side of the picture continues to get tough. And I do worry about, as we look for operating loans in 2017, what happens to some of the producers that we see in the 10th district.
Scott, as we look ahead to next Friday, Cattle on Feed report comes out. What are some of the things we're looking for, and what are maybe some expectations pre-report?
Yeah, so I'm going to be curious to watch Cattle on Feed to see if we feel like we've been holding some calves longer on pasture. I know that when you look around the country, with the exception of the Southeast, precipitation's been good. I think we've seen some good wheat pasture growth starting, so we're seeing some demand for calves to go on that wheat pasture. But are we holding some of those calves back that eventually have to get to the feedlot, and whether or not the next Cattle on Feed report gives us more information about that, I think is important as we again start to set the stage for 2017.
Well, we definitely will have plenty to talk about next Friday. Good to see you.
Good to see you as well, Megan.
We will see you in a week. If you have questions for Scott or myself, you can go to our website, brownfieldagnews.com. Look for the weekly livestock market update and submit your questions there. You can also subscribe to have it delivered to your email box every Saturday morning to enjoy with your coffee. We will talk to you next Friday. I'm Megan Grebner on Brownfield.